Hello traders, Gary Wagner here. Approximately 10:50 in Honolulu. It is the second day of November, Wednesday, and this is the daily report for gold and silver. The Federal Reserve came out this morning in an open market committee meeting and lowered their outlook for growth in the USA as we close 2011 and 2012 begins. They cut their growth outlook and in fact are looking at unemployment rates staying at about 8.5 to 8.7 through the final 3 months. They also said that they're going to maintain or keep the federal funds rate at a range between 0 and 0.25 until the middle of 2013. That set of statements set the following wheels in motion. First, it drastically undercut the strength that we saw in the dollar. And first chart that we'll look at today, of course, is going to be a daily dollar chart. And as you can see, this market had moved up tremendously over the last couple of days, but it is currently trading down. And traders, we talked about this a little bit yesterday and the other day, but that's this gap right in here. And this gap's going to come and get filled. Typically, gaps always do get filled. That is that price void right in here. So in terms of a minimal move in the dollar, I would be looking for the dollar index to begin moving lower and to at least touch upon, call it 76.15 to 76.25, and literally come in and fill this gap. The effect that it had on the gold and silver market were higher prices in that we have a lower dollar. So we have 1737 current price of spot gold. That puts it up about $17 on the day. And silver up about 80 cents, as you can see, currently trading at 34.18. 34.18, as I said, putting it up a little bit over 70 cents on the day. Traders, I want to take a look at our daily chart. This is of spot gold. And if you can recall from yesterday's report, I talked about two things which I thought were, on a technical basis, absolutely something we needed to know. The first was the type of candle that we were looking at. And this is that doji-like, almost hammer-like candle in which you have a significantly lower low on the day, but the market closes as a small bodied candle. That small bodied candle, of course, is in a morning star position. And the most interesting thing that I noted yesterday was the fact that as we touched upon this 38% retracement level, and that's this 1681, my belief was, and I think I put this in the summary in the report, is that we had actually, when we saw this marketplace touch this point, witnessed the low that we'll see. And in fact, the market should rally off of this point, and we should see gold move higher. Now, in fact, we are seeing that today, but we are really getting a mixed bag of signals in that when we look at the candlestick signals, and I am bullish, and I do believe the market's going higher, but what I'm finding quite fascinating is this roller coaster, this marketplace that although is trading within this range here, if you take a kind of a slice, you get this three-river evening star formation. Of course, as I said, we didn't get any confirmation, so it really didn't indicate lower prices. But then when we look at the market over these last 3 days, we get a three-river morning variation. And so you can see that this market has just been all across the board. But I will tell you this. As I said yesterday, I believe that this 1681, that is going to be the low. And over the next couple of weeks, we will see this market rally. Where do I think this market's going to rally to? Well, the first place that it's going to have to take out if it's going to break 1800. And I think that's where we're headed, traders. But the first major area that we really have to take out is going to be this 1775. That's the 61% retracement. If I carry this all the way across, we'll take a look at areas that we have seen significant activity as it has really gone through this area, and we can see really how dynamic this particular price zone is. The first thing that I do want to bring to your attention is as the market hit its record top, this is at 1920 and this is back at the end of September. As the market came down, it did come down, but it attempted to really form a base. And this is, if you can see, a series of lows and a series of market bodies that seem to form that base right at 1775. When it was unable to do that and the market broke, you can see that it did break very, very hard, and in 1, 2, 3 days went from 1775 down to that intraday low of 1530. Call it 1533 is what I have as a price marker. But the one thing that you can see is that as the market broke through this particular price zone or price target at 1725, you can see that it broke hard here, and you can see that after forming a base at 1775 and attempting for a number of days to really stay above it, once that market broke, it did break hard, and it broke hard to the downside until it found this support down at 1533. You know, traders, it's interesting to see the type of reactions we get to statements by the Federal Reserve. This statement coming out and putting pressure on the dollar, meaning if interest rates remain low, that dollar-based investments aren't yielding the same types of returns as, for example, the euro dollar and their notes, which are currently yielding much higher interest. It also affects our equities markets because, of course, a inexpensive dollar means the foreign investors can get into U.S. equities at a attractive price when you look at the differential between the currencies. Now, our stock market also, as you can see, has reacted to the positive side, 1237.90 current print, and as you can see, you have this what is known as a bullish harami, which is an inside trading day going on in the S&P, but you do get this green candle. This green candle is indicating a much higher close as compared to the open on the day. That, of course, is going to bode well for silver. And when we take a look at our current silver chart, which, as I said, is trading up substantially higher, we can see a couple of things. And the first thing is it pretty much ends this down draft that we saw within the marketplace itself as the market touched upon roughly $36 per ounce and then hit a low of about, call it just above $32 an ounce. But it was able to do that. When you look at this price differential and look at the time period, you literally had 1, 2, 3 days to watch the market trade from this above this 50% retracement mark 3505 to trade just to 3151, and this is where I believe you have absolute support right in here. You also have $33 now as good support because 3290 I believe is going to be indicative of a bottom in the market or support. As long as the dollar right now remains low and the equities markets is able to fuel upon that, it will ride the shirt tails of gold, but silver will also ride the movement up in the equities market. So it's getting really a double-edged sword in terms of benefits as we look at this marketplace itself. So traders, what are my recommendations and where do I look at this market in terms of overall growth and trading patterns, say over the next week or so? I would feel comfortable entering long positions as long as we maintain closing market activity, closing market prices above 1726. That's at 50% level. As long as we remain above this, I am bullish in the precious metals market, specifically gold. As far as silver goes, I am also looking at that to benefit from this most recent action, and I would look, as long as this market can maintain itself above 3290, call it 33, that would indicate higher prices in silver. You can go ahead and act accordingly based upon that knowledge. As long as the market stays above $33 in silver, I believe that it is proper to enter from the long side. And again, traders, as far as gold goes, as long as it maintains itself above 1725, I would feel comfortable from the long side. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.